Hello everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothfeld. Here are 3 important things to pay attention to for the upcoming trading week. Now before we get into that, let's talk about the 2 massive highlights from last week. On Wednesday, we had Nvidia report earnings with blowout, stellar, astronomical earnings, shocking the market, sending it soaring higher in the after-hour session. Of course, over the next 2 days, gave all of it back and then some, bring those markets down. And that may be coupled with what happened on Friday morning with Jerome Powell at the Jackson Hole Symposium, really citing weaker market conditions, feeling the need that there's still probably going to be some rate hikes going forward. Markets didn't like that so much. So we got a lot of volatility last week. Now, I'm not so sure we're going to see that same extent of volatility in the upcoming trading week, but we do have some names in the earnings calendar. So let's start with your earnings calendar for next week. On Monday, you've got nothing, and yet there still are 261 companies reporting. Tuesday, they start to roll in. The EV darling NIO. You've got Best Buy and Hewlett Packard. On Wednesday, you've got Salesforce, Viva Systems, Prudential, and CrowdStrike. Thursday, wrapping up with Lululemon, Broadcom, Dollar General, Sienna, Dell, VMware, and Hormel Foods. And that, my friends, is it for your earnings calendar. So no A-listers, no FANG stocks out there, but still, these will probably have some nice movements to them. So check your earnings calendar. Again, I did cherry pick some of the bigger names, but these are pretty much all the big names. Now, let's go to what Jerome Powell was talking about at the Jackson Hole Symposium, which of course all traders were glued to, and that was growth going forward for the U.S. economy. Of course, it's something that the Fed would like to have happen. They want growth. Of course, they want to keep inflation down at 2%. And how do you achieve that? The chess game needs to be played in order to achieve those goals. So the GDP numbers come out. Now, we've already had the advanced, which was the first reading. This is the second reading of GDP, which is the preliminary. Now, if you notice on the hard right edge, it says 1.3%. It's a bit misleading because right now the expectations are it's going to come out at 2.4. And you're thinking, oh, that's going to be doubling almost what the previous number was. No, that's not quite right. The way this number is reported, yes, it is a quarterly reading for GDP. However, they annualize it, meaning they take the last 4 bars and add those together. So if you look here on the screen, I'll put a red box around the last 4 bars. You notice there's one there that's below 0. So that bar is negative. You got the next 3 are positive. That gave an overall reading for GDP of 2.4%. Now, the expectations are that we are going to get the next reading of 2.4% as well, which is interesting because if we drop off that last bar on the left side of that red-hand box, you would think GDP would be going up. So they're expecting probably a contraction in the quarterly GDP number, which of course gives that 2.4 and maintains it right where they are at. Now that's going to happen Wednesday morning at 8:30 a.m. Eastern time. Again, Jerome Powell has been hammering growth, inflation, and unemployment data. We've got 2 of those announcements happening this week, growth being a major one, again, Wednesday at 8:30 a.m. Eastern time. Now let's move on to our last piece for your Monday morning must-knows, which is probably one of the more important ones. It's the looming thing that Jerome Powell keeps riding that magic horse into these press conferences, which is inflation. The core PCE price index is what he says is the most important metric that the FOMC is looking at with regards to its inflation projections, and we get that number on Friday. So get all excited for that one. Another Friday fireworks show for you. Had one last week with Jerome Powell, and this week we'll probably have one with the inflation data. Now, if you notice here, Friday at 8:30 a.m. Eastern time, it says 0.2% was the previous number. Expectations are that we are going to come out at exactly the same number, at 0.2%. Now, of course, if we continue to stay at 0.2%, this is a good thing, right? You can see there's been wild fluctuations to the left. But if we stay at 0.2%, if you annualize that and say 0.2 times 12, you come out at a 2.4% inflation, which is what the Fed has been targeting. So that would be pretty good. If we stay at 0.2, if we drop to 0.1, that could be really good for our markets. Anything higher than 0.2, expect there to be some aggressive sell-off in the markets. And the higher above 0.2% we get on Friday, if it happens, I would expect more sell-off because that means the Fed is going to more likely raise at the September 20th FOMC meeting. So a lot of important stuff. We've got a light earnings week. We've got some good GDP numbers coming out. Well, hopefully there's some good GDP numbers. And then, of course, the core PCE price index, which will give us a measurement of inflation. That, my friends, is your Monday morning must-knows. Be careful out there. We'll see you next week.